All right, so the stock market is crashing hard. This is very uncomfortable for me because I am in the stock market like a lot of people. So today, at the very end, there was a rug pull and the Nasdaq was down 2%. So all day long, I was up. Let's go to the day here. Uh, yeah, here it is here. Ouch. So 9:30. That's when the market opened there. Things were going great. I think the Nasdaq was up over 1%, and then we had this huge sell-off. Now, why is this happening? Well, there's been a trend for the last. Let's go to the 6-month chart here. Not so much the overall Nasdaq. That's just a new one. But all the growth stuff, the speculation growth shares, I'll show you here on 6-month. No, okay. First, don't bury the lead. We also have the futures. The futures. Let's see if I can bring those up. The futures of the Nasdaq is falling like crazy as well. So it was 2% to. Oh, that's the futures right there. So the overall, let's see the day. The day was. That's the futures as well. Okay. I'm confused here. All right. So it's showing the futures. The Nasdaq was down 2% today. What is it showing me the futures for? How do we switch just to the regular Nasdaq? Let's go to. Oh, there's a crown that I want for Spell Fury. Okay, let's go to maybe CNN and stocks. I just want to know what it was actually today because it's already down another 2% after hours. So the rest of the world has a chance to sell. All right, so here's the futures still. And then this up here, is that it? 1.3% down. Okay, that makes sense. So the Nasdaq was down 1.3%, S&P 500 down 1.10% and 1.1%, and the Dow down 0.89%. Now, if you're in mostly safe stuff, you're okay. But if you're in like DraftKings, which I like, or something like Tattooed Chef, which I like as well, things have been very painful. So let's look at the 1 year. So if you've been holding this all year long, you bought it at $24.74. And here's why you would buy it for that much. Their revenue is going through the roof, right? So they made $47 million there. And then the next year they made $84 million. So, and then the next year they made $148 million in revenue. And these are the earnings down here, the blue. So they had little earnings 2019, and then their earnings went from $4 million to roughly $67 million. So they are on a great trajectory, and this is at a 52-week low at 1308 today. This company is a terrific company. Now, again, I have no, exposure to them because I don't know if they're in Canada yet. But from everything I've seen online and the reviews and the sales, I guess it's available at Target. Things are going fantastic for this company, and they're just getting destroyed. So if you own this in February of last year, you're down to, let's see, 26 would be double your money. So you're almost down 45% on your money. Okay, now it is up in after hours, which is good because the rest of the world is going, hey, this is a good stock. Now another one that I have where I sold this very high, DraftKings, which is online gambling basically on your phone, just legalized in New York. So that has let's look at now again, the revenue's up every year, but their earnings are way down. But that's because they have to advertise and compete against lots of other apps where you can gamble. But they are the biggest one, I believe. And they're down to $20. Now, just like Tattooed Chef, let's look at we're on the 1 day, the 1 year. So it hit $71 in March of 2021. So let's go back to the little chart here. Yeah, so if you've been hanging on to this, and I sold it around 60. So I sold it too early around here because I was up on it. Because why wouldn't you, right? You want to sell into strength, right? So I was buying it through 2020 at around maybe 30, and it doubled to 60 and sold it all. But then I started to buy when it was falling. I bought a little at like 34, and then 27, and then probably like 23. I bought some the other day for 22, and now it's down to 20. It looks like everything that's high growth speculation is dropping back down to its pre-pandemic numbers. So by all rights, DraftKings could drop to like $12. That's March 1st, 20. So, or even pre is 10, and then during the dip, it hit 12. So it could go that low. Oh my gosh! And I have been getting back into it. This is very painful. I have a certain threshold. If I hit it, I may start to think of selling just in case things keep going down. Because if we go to the futures, it's broke through the 200-day moving average, which is never a good sign. You always you want to be on the other side of that thing. So one of my things is I've been, I guess, catching a falling knife because it's been going down for a long time. But I may switch at this point and protect my wealth, and I'll pay a premium for it on the way back up. So if it falls 1 or 2 more days, that's all I got, because I do not want to lose money. Warren Buffett always said, rule number 1, don't lose money. Rule number 2, refer to rule number 1. So yeah, we're cracking through that. What about the S&P 500? Now I also want to look at Netflix in a second, but has it crossed the 200-day moving average? It's going to test it very shortly. So we're getting close to testing that. And if it breaks that, just like the Nasdaq, is the Nasdaq the canary in the coal mine? We've got the MACD down minus 32. Now, I was looking at this today. This is the RSI, the Relative Strength Index. So back in sort of the crash of 2020 in February, March, it was at 19. So if you bought then at 19, you did very well, because you could have sold here at 75. So that means basically everyone's selling, right? So we are at 29, 30. So we may fall to that, and it may be a good buying signal. But anyways, what are you guys buying? I just want to check out Netflix. It's a little... I'm very fearful. No, I'm not. I'm not very fearful. I'm doing pretty good. I'm mostly in safe stuff. So let's say something that you really wanted to buy. That would be like Enbridge. It's a Canadian company that does gas and what's the code for that? I haven't done that in a while. Enbridge. Let's just put the whole Enbridge. Oh, geez. Okay, what about Bell? Bell Canada. That's our mobile app here. Not app, company. They do all our cell phone plans and cable and stuff like that. Let's have a look at that. That would be something that's a 5.25% dividend, which is fantastic. How are they looking? Like, if you're in tech, yeah, you're getting hurt. And if you're in growth and speculative, yeah, you're getting hurt. But if you're in like something like Bell, which is solid, what's something happened there? I don't know. That was back in 2000 and went through the roof. But yeah, look at this. So over the last 5 years, it's sort of slowly goes up. It dips, and we're at like one of the highs here, right? This peak here is in 2017, and then it dropped in 2018. Then it was up in 2019, down in 2020, and then now it's up. So we're at a high. So, and you're getting paid 5.25% cash per year on that money. So like if you're holding quality stuff, you're fine. And most of the stuff I hold is quality, but I this recently in the last 2 months started to be tempted by the prices on these things. What's another one? I really like what's it called? The meat one, Beyond Meat. So I've been buying that. They just got a deal with Now, this is, probably months and months in planning, but they are testing their McPlant burger again. And that was just released today, and it shot up. If you look at the day, this is crazy. So it shot up like 8%. Although I guess it opened at 60. Oh, yeah, it popped between the end of yesterday's market and this one. So it was up like 8%, and then just crashed with the rest of the Nasdaq. But these guys also have a Pepsi deal with a beef jerky product, which is supposedly really good. But I like these guys. But if you've been holding this for the last 6 months, you went from 125, you're cut in half. You've lost 50% of your money in this thing just since July of last year. But look at this. I remember I sold some at 200. Where? Right around there. I sold some close to 200. On the day, it was 200. I sold some there, and now I'm back in, but where's the bottom on this thing? So March 1st of 20 is $66 was the bottom, and we're at $61. So I guess when it IPO'd back in, so it's lower than its IPO price. Like, this is cray. And look at their earnings. Look at, well, not the earnings, but their revenue. Their business is building year after year after year, right? So the revenue in 2017 was 32 mil. Next year, 87 mil, 297 million, and then 406 million. Now that they have also that KFC deal where they're going to be in 5,000 restaurants in the States, and then just today's McPlant burger thing in 500 stores. And if you look on YouTube for reviews of people eating these things, I would say the majority of people think that it tastes great, tastes like beef, and they're shocked. So this is another one that I've been buying, and I'm getting hurt in. There's only a few companies where I'm into growth. So I'm DraftKings, of course. Have we looked at that one yet? I think we looked at this too. Yeah, we already looked at this one. Another one is Roblox. I like Roblox as well. I also would like to look at Hood before the video is over. So yeah, look at Roblox. So normally it's been trading around less. Right now it's less than what it's been trading at. Let's go to the 5-year. It's fairly new. So it's very close to its IPO price. And it had like great earnings and great, I guess with kids now, the knock on it was that it was like people under 12 playing it. But I guess now there's more people over 12 playing it than under 12. So they have fantastic numbers. Let's look at their revenue here. So 2018, $324 million in revenue. And then you got 508 and then 923. I like this trend. Now they're spending some more money than they should, but you're buying a company that's growing. You don't really want them to be making money. You do, but you'd rather them spend it and just continue to grow. So that's another one I'm looking at. And one I haven't got into is Hood. I got suckered in because I'm a sucker for really cheap prices, and it's been going on. But look at their revenue. So from 2019, 277 million, and now they're at 958 million. So almost like $1 billion. So, let's see. Yeah, everything's at 52-week lows. So its high was 84. So if you held it then or bought it then, it's now at $13. Like, what is going on? The market is crashing. Now, again, it's technically a correction, I believe, for the Nasdaq because I think it's at 12%, and a correction is 10%, over 10%. So what are you guys buying? What are you guys thinking? I'm getting a little worried. We don't need let's look at the overall chart of the S&P 500. The 200-day moving average hasn't been cracked since really the big crash in March 2020. I guess it bounced off it there, and we've just been having a heck of a time doing quite well. But it looks like it's going to test it in the next day or two. So if it cracks that, my goodness, things could really fall. So I'm keeping my heads up. I'm not being complacent. Most of it, like I said, like Bell and banks, and those are doing fine. Let's just do a quick look at the banks. We'll try American one, JP Morgan, and let's have a look at the. Now, again, why is this happening? We could talk about that as well. It's got a bit of a hit there, but Yeah, I guess JP Morgan's had a bit of a sell-off. Now, they just released earnings and stuff. So you're at the same level that you could have bought it in summer of last year. But overall, you're doing quite well. Nothing to be scared of yet. Yeah. Okay. So now, why is this happening? Well, the Fed's going to raise the rates in the States and in Canada. So we could actually get news in 6 days about when the rates are going to be raised. We're a little earlier than the States that way, but the States Fed Jerome Powell, Fed chair, I think said that potentially 3 times raising the rates. And now again, why does raising the rates scare people? Well, let's say you're in a variable mortgage on your home. That changes with the rates. So if they raise the rates, well, you're paying more every month. So that there's that, right? So you don't want that raised too much, because if someone's, living check to check, and you have to pay more and more every month or every time they raise it, that's an issue. It gets people scared. And as far as borrowing money, these companies like DraftKings that are borrowing a lot of money, well, now it costs more money to borrow money to grow. So therefore, your future, your earnings, your net, the money you make, is going to be down. So they recalculate that. So that's why everyone's scared. And again, the fight against inflation. People are scared about inflation. And you should be, right? Because if it's 7%, as they said in the States, I think we're 5 in